All right, I think we're
All
live.
right, we're live in our new digs.
In
And
person. Second time meeting George. We are in New York City live streaming together for the first time, hopefully the first of many. We have a lot of interesting topics as usual to get to today. Hope to see everybody on our X Twitter live stream. If you're viewing from X, comment. If you're viewing from YouTube, comment if it's your first time. Like and subscribe. The Fed had a big meeting today, which we're going to get to. They hold rates steady, which was widely expected. I believe it was 97% priced in before the day started. And I believe from what I was reading in between setting up for this first ever in-person live stream is that they set the table for rates to be cut in June for which is maybe later than the market had expected. So we're going to get into a bunch of topics. We always delve into the latest and greatest of AI. So we're going to cover some cool products that have just been released and teased to the market. And we have a lot of stock market stories to cover. Thanks for joining us, everyone. George.
yes, I promise a lot of very
Event in
like this is
person.
new Prospero HQ. Like, yeah, I do believe we'll be here for Stephen apparently is not confident in what we're doing here. I think we'll be here for a while personally. Uh this is also my home. So yes, I especially for those that don't know, I was at my parents' house before, my little sister and her dog that would make appearances. So that was lovely. I love shout out to Shirley Kalis, who I love. But it's nice to be in a new headquarters. Got a nice, skyline in the background. Going to be doing a lot of. You try to have more guests on the show. A lot of cool stuff that we have planned. But we wanted to get Steven here for the first one. We literally like you'll see like maybe some of this footage later. It's gonna be released like the pretty much the only thing that exists here is this like live stream setup, this couch behind us, and a bed. So we got this up as soon as we could to get everything over to you guys. And yeah, pretty exciting. The Fed. Uh, oh, we got last.
D. Curtin's, thank you. You're welcome, D. Curtin. I think I just, posed questions to George, and I think a lot of retail investors, because that's what I am. Obviously, I'm not as experienced or as well versed in the market as George, so I like to pose a lot of questions that I think could help people. So I'm glad that that helped you, and hopefully, you were able to get out of a stock or get into a different stock that was better for you. But happy you found value in whatever that thing that I said. That's cool. Thanks for the comment.
Yeah, and we talk about that a lot, obviously, where it's just like, yeah, sometimes it's a lot of this stuff is in my head and Steven helps like pull it out, but there's also the other part of it too, where it's just like I don't necessarily know what people want to know and what they don't. And so it's like helpful, like, yeah, Steven kind of like for those that don't know the history, like Steven actually interviewed me on his channel, Foster.Fi. Uh and then came back and was like, yeah, I think like some of the stuff I could help like make this better. And like for those that haven't checked our TikTok recently, like yeah, last week we had 3 in a row, like where the lowest one was 36K views. Our blippy one that we really liked here, like Steven and I were really amused by, that one was maybe one of the best. And that's like funny, that journey, because even when we had our first like TikTok on, I think it was Tim Cook, like blow up to like 44K views. I was like, oh, but now we're like getting there on a pretty regular basis. But sorry, well, let's get to the material. What you guys are really here for?
Yeah.
Not for our happiness about our better setup, but like yes, we're gonna be like better sound. Like we're gonna have some guests for you coming on here. So yeah, it's a very exciting step for us, and we're very grateful to the people that come out like and have watched the streams already.
Yeah, so like I said when I started the show today, the Fed had a meeting. They held rates steady, and we usually start off with like our stock market overall view. But I think we should start with the Fed and their move today, and then that'll kind of lead into how the market's reacting based off of it. So
Yeah, the one thing that I'm gonna have to get used to here is I'm gonna be looking at my phone more on these streams, because sometimes I have different things up on my monitors, and it's just a one monitor situation here right now. So here we go. I want to look at FedWatch, and I'm going to look at two things. And this maybe might even help that I narrate this stuff more. I'm looking at like the FedWatch. I'm looking like how much the probabilities changed today. And then the other thing I'm going to look at is there's like this mobile view is like very different. Um, I'm actually having a little, I lied. I'm going to look up and look, and then I'm gonna put this laptop screen down so I stop looking at it because that
Yeah,
it's a
you're doing that too.
distraction. But we're gonna get you that. But like in the meantime, I'll talk to you about what I was seeing in QQQ net option sentiment. Uh, which is that for those that don't watch, like I would encourage anyone that watches this, likes what we're doing, uh, to definitely like always kind of check that out. Because that's a very, very important, especially now, I would say QQQ is an important metric on the market. Um, so what I would say on that note, okay, let's look. Yeah, so the probability of the ease now in March is 58.82, and that was looking closer to 70%, I believe, even like a week ago or 2 weeks ago. So yeah, people are changing their interest rate predictions, and like, yeah, it's no surprise that you see, maybe such a low QQQ net option sentiment, which, by the way, what we were talking about earlier is like we saw it go as low as I think maybe 16, 11. I said someone actually, people were messaging me about it today. And like for those that like might have seen me like getting into SMCI and out and back in, and this other thing I was doing with VRT, which is a new stock, essentially that's me like in real time trying to manage my risk around this stuff. And I picked up rack space yesterday in addition to Xerox more tech exposure because I wanted to like, I wasn't necessarily sure what I wanted to do with SMCI yet. I was at it, exposure on things like Meta. So that's the logic for those that are like watching me and like looking at me, add VRT or SMCI like in and out. And like, that's just because like tech has been that confusing, you start off the day with such a low net option sentiment like QQQ, like that low at 11 with SPY still up near 50. I've never seen a market like that. And that's like, I think some of that is like kind of like the yield curve inverting, and people just kind of having that be, I think perhaps an increasingly tough environment, especially for tech stocks that have rallied so much. So like, that's the thing that we always say. We could just be seeing like a tech correction. Like it was going up, I would say way more than it should. And you heard, if you watch these streams a lot, heard us kind of like say something to that effect. But the other side to it too, is that AI is exciting. SMCI, like obviously we made a killing on it this year. Their earnings was like absolutely incredible. Like them, like Nvidia, like obviously it's a business that's hard to bet against, and they continue to do well, which is why I was kind of like, oh, like are we going to see a big correction? It started to look like SMCI when I got out of it yesterday. It lost what was as much as a 12% gain, and it was like had gone down to 2, and I was like, well, this is too much momentum. I need to get out. And then I saw it charging back and I was like, well, don't want to miss the boat back up. I thought I was going to like maybe be able to re-enter it a lot lower, but it looks like I was smart, that I was right to think I wasn't going to get that opportunity. And, where I'm coming to this is some people like, when we are thinking about, I'm getting closer to putting together like a 1 year hold portfolio. So that should be pretty helpful. But like what you're seeing is kind of what we tell people, like, the newsletter picks, and especially as I update them more, that's just to show how much as I'm doing that, that's just actually to show how much like if you're doing best practices, you actually need to be willing to adjust your portfolio, make small adjustments, add a new, tech short, maybe get in and out, because, basically what I was doing to that is making sure I didn't have too much tech exposure. And whether that's adding a short or adding more longs, that's something that like me as a very advanced user thinks about, but like it can go as low down for you. Like if you own just like 3 tech stocks, let's say in a very simple example, and you see like my concern, me like either increasing my short positions in tech or dropping some of my long ones, like that could give you an indication that it's just like, oh, like George seems worried or like indecisive or anything like that. Like that's the kind of thing that I really want a lot of people to take away. If you follow the newsletters, you follow this, where it's just like, if there's one lesson I really try to impart, it's that no one can really teach you how to do this. And it's so personal. How many times you can check a day, how much money you have to risk, like how advanced you are as a trader. It's very different if you're comfortable using something like a stop that's going to get you out of a bad position if it hits a certain price versus if you do have to watch the markets and that's your only way out. There's so much nuance to it. That's why we always kind of give people this advice and say, like, no, you're not really meant. Like, I want people to learn how I do it and look at the market and, like, what stocks. The big thing that I say is, like, okay, something that should be easy to take away is, like, how much we love Meta around here. And I put it at the top of every screener, like, still love it. I made a post about it on Twitter the other day where I was like, nope, raise the price target again. And some people are asking me about Meta all the time, and they say, well, is like, it's been 100 price, like, upside breakout forever. Like, is that still good? Is there something wrong? It's like, no. And you saw it yesterday. We saw another analyst basically raise a price target by, I think it was like 25%. KeyBank did. And it's like, that's one of the mechanisms that, like, distance from price target, like percent buy rating for analysts. That's one of the mechanisms that we look at in upside breakout. So, like, yeah, if options bets stay live and bullish, and in the long-term markets, analysts keep upping their estimates. Like, price momentum factors are the other one. We've seen it go up. There's a reason that we started with upside breakout at Meta at 100. It's still there. It's because all of those things keep happening. Options pricings remain bullish even as the stock goes up. Analysts keep increasing their price targets, leaving their buy ratings on. Price momentum factors. For those that don't know, I told someone that was really shocked. The most reliable single variable of the stock market.
I think it froze our screen when we shut the computer on the stream. I just got a comment. Comment again if the video is back up and running live.
So
I have to keep it open. But you guys heard that the whole time, right?
yeah, hopefully.
Okay, I think it's better now.
Yeah, hopefully we didn't lose too much time. Sorry about that, everyone. First new screen, trying to train myself and not looking at the computer screen went a little too far. Anyway, I think the big thing and what I was saying, oh, great. At least you still heard. So yeah, I think the big thing in what I'm saying there is, like, yeah, we try to, like, arm you with, like, information that allows you to enhance your strategy. Like, you're not meant to get in and out of these stocks. Like, and I always recommend, I was like, no, if you don't have the time, but it is, like, meant to illustrate, like, oh, like, I am really nervous if I'm, like, adjusting my portfolio that much that I'm just like, I don't, like, it's not a clear direction. And it's a weird time, right? SPY, like, for those that have followed Prospero for a long time, QQQ net option sentiment was always higher than SPY. And we never really saw SPY net option sentiment go above 30 in, like, over a year. Like, historically, it's been higher than that. So yeah, we're in a weird time where QQQ touched down very low. It's curving back up. We are seeing some tech come back a little bit. But yeah, like, if it ends the day above 30, this might just be like a little hiccup. But if it keeps touching low, especially tomorrow, especially if you guys look at SPY net option sentiment in the map, in the app, it is on a downward curve. Like, so some of this stuff is like a developing story concerned about. Like, if anyone does have any questions about how to use Prospero, we did make a really good new kind of primer for that we dropped in our newsletter, that I'm just going to drop again quickly in here because I think it's super, super helpful. But in a second, after I do that, if there's any, Stephen, if you want to jump in with the first question while I'm doing that, go for it.
Yeah, so thanks for the comments, everyone. We don't have any stock market questions related right now, but feel free to comment, everyone. We got one saying the Knicks are mid, but I mean, they're the third seed in the East, so I don't know how that is.
You said that. I agree with you. I'm very happy about the Knicks. Don't let Stephen.
Oh no, he's saying they're bad. I'm saying they're good.
Oh,
yeah, you agree with me.
Yeah, I agree with Steve.
But anyway, let's stay on the stock market. So speaking of, like, what you all that you just said, I wanted to get into Microsoft and Google earnings because you were talking about how it's such a difficult market to navigate with the QQQ and the SPY not really cooperating together. And both Microsoft and Google reported good earnings yesterday. They both beat, but both of the stocks reacted poorly. Google worse, it was down 5%. Microsoft was kind of coming back to almost neutral. I think they were still negative though. But does this foreshadow problems for the market when obviously it's rallied a lot already, but companies are reporting good earnings? and the stocks are still going down. So, like you were mentioning Meta, do you expect that could possibly happen with Meta and other of these big tech companies going forward?
Um, yeah, I mean, sorry, hold on one second.
So what link did you just share for them in the chat?
I just shared like our intro, our primer. Uh, is sorry, I just need a text.
Yeah, no problem. Comment everybody if you're liking the new video, if the audio is good. We had a little bug with the camera, but seems like we got that working now. I'm also looking at the computer. I should be looking up here. So uh, everybody comment if it's your first stream. If it's your first stream, you're lucky because it's the best quality stream we've ever had. So you've joined on a good day. But let's see some comments in the chat. Comment.
No, we're gonna do, sorry, we're working out some kinks with some of this stuff. But yeah, so in terms of like the Microsoft and Google thing, I think what we're generally seeing is yeah, thanks. What we're generally seeing here is essentially that softening, I think, that we're talking about. I think, whether it's like search or ads or like a lot of the things that we talk about, like after consumer cyclical, the next thing that we basically see are ad businesses. And Meta even had a tough day today. So that's a developing story. Like some of that is regulatory stuff with TikTok and that stuff is really hard to predict. Even for investment professionals, because like it's hard enough to predict what the government's going to say. It's another like derivative harder to predict like what's actually going to happen based on what they say or how the market's going to react to that. And then yeah, I mean, it's very, very difficult because you don't know, like sometimes the businesses can turn that into lemonade or they're working in the background. But anyway, yeah, I think there's definitely concerns over like the AI regulations that we saw yesterday of like, perhaps some of the IP of Google and Microsoft basically being like grabbed by China. I think what I said on the live stream earlier this week was definitely important, where it's just like, yeah, like the government might be asking for that, but all of a sudden, China can hack the government and has. Like all of a sudden, you might just be putting all of AI's best tech where it was like separate and you needed different things to hack all in one place. But yeah, I think that there's definitely just concerns over, as we talked about the ad business, because if consumer spending is going to be a thing, ads are the thing that get hit after like the actual consumer spending company, because obviously once people spend less money, people also want to spend less money on ads. That's less revenues to the Googles, the Microsoft. Even Amazon has a lot of ad revenue increasingly. So those are all businesses that I'll definitely watch out for and see like on this developing story. But yeah, I think that we're definitely like, this is the kind of thing that we talked about like with Nvidia, and like one of the things that we watched about and when we kind of saw like a bear run earlier in the year, where it's just like, yeah, when people have like what are ostensibly good earnings calls and then you don't really see that market reaction, it definitely, and then you look at like what QQQ net option sentiment's happening, like I am definitely starting to get concerned and might even adjust that we might, wake up tomorrow and see like a market that's down, 3, percent on the QQQ. I would say more so. Like that's not a prediction. I'm just saying it's not within the realm of like it's not impossible the way the market's behaving, and like it is a good idea. And I even said yesterday, which was probably very good advice in my letter to neutralize, in my trading letter, to neutralize your portfolio. And that's what I recommended. And I recommend it even more strongly today. Like the extent that you can do like an SQQQ hedge, as I suggest in my investing letter, or you can scale down some of your positions into cash so you're not as exposed, especially overexposed if a lot of your stocks are in the tech sector. These are things that I think it's just like going to be a smart thing to do, as it looks like, as I've talked about in my letters and kind of where we started here, the market is starting to accept that it won't get rate cuts as soon as it might have thought, which is definitely something to be concerned about, especially if we start seeing consumer credit crunch hit where people are spending less. And, we also see like the Fed being like very cautious on, whether if we've, tamed inflation and when the rate cuts are coming. Yeah, I would say all of that is something that we'll have our eye on. But like definitely the easiest thing for you to take away from this is keep an eye on QQQ net option sentiment. If you see it staying low, that's definitely something I would say if you haven't already like started to become more defensive, as I suggested, move more to cash, look at an SQQQ hedge of your portfolio, do some tactical shorts. SCC is something that we like and like SQQQ, but it's a 2x consumer cyclical target. So that can like even zero you in on like, especially if you have a heavy retail portfolio. But I think like SQQQ is like the best blanket hedge of the market. But SCC could be the biggest win, SCC, because what could happen, especially if you have a tech heavy portfolio, you could actually see your tech heavy portfolio go up and SEC, like consumer cyclical, go down. And so that you make money both ways on your short. And like, I'm not saying that will happen, but I am saying that's the potential of an SCC and, kind of tech heavy portfolio where you could win both. But the reason that I suggest SQQ is like more blanket is because most people these days tend to invest heavy tech, heavy growth. Just like naturally, it's the names that people talk about the most. Like even just off the top of my head, like Palantir, Nvidia, Microsoft. Those are kind of like the big companies that I hear like the most buzz about. And obviously tech heavy, different kinds of tech. Tesla obviously gets another buzz. That's like tech consumer cyclical. And we have tech comms communications like Google and Microsoft, or Microsoft might be pure tech, and then Nvidia is just pure tech, right? So all of this is like a lot of people would have like a tech heavy portfolio, I imagine, which is why SQQQ is a nice kind of, as I say, blanket hedge to basically act on what we're seeing in terms of confusing messages from you know especially I would say QQQ net option sentiment going down. So yeah, I think that's probably a sufficient answer to that question.
Yeah, and you mentioned how you told people to stay neutralized yesterday, and we actually posted a short clip of that on all of our socials. So I shared it in the chat for you guys. If you want to follow us on Instagram, TikTok, obviously if you're here, you're probably on Twitter or YouTube already. But we post 2 shorts a day, so look out for those and follow us. There are moments from these podcasts that were live streams that are the best moments or most informative, so they're good to watch. And now I understand after filming a live stream twice a week, I always used to wonder, like, why is Elon Musk always on the news? And now we're victims and we do it too because he draws eyeballs. So we have another Elon Musk story today. So we covered this last week during our streams where he was going back to the Tesla board and he wanted a $56 billion compensation package. He claims, which I don't know if you believe him or not, that it wasn't for the money, it was for control over the AI products. He wanted a bigger voice. He wanted 25% of the company again. But a Delaware judge declined the ask of Musk, so it's not going to happen. And what surprised me, George, is when this happened, which was last night after hours, Tesla stock declined 3%. So I want to spin this into like, do you think Tesla will still be like as good of an investment as it is today beyond Musk? Can Musk leave and Tesla survive?
Um, I think the simple answer is no. I think some of the things that that I talk about, and it's not Musk in particular, it's just that the worst thing you could do as a company is split the attention. Like even just giving, before I go back to Musk, like a personal example, like we're looking at like international expansion right now. Like if I was just basically like, well, if I don't get more equity, like I'm just gonna go launch my international expansion, on my own personally, and I'll just build new models over there or whatever. And I don't think my investors would like that very much. Like I might win that battle, but I'd be a jerk if I did that. I might get what I want, but especially as a public company, you shouldn't. And I'm glad a judge ruled that way. You shouldn't be basically holding your shareholders hostage for your work, right? He already announced another reason it didn't held up is like if he wanted to start a new robotics company, right? that would well be within his rights. But when he starts talking about Tesla bot, like, and making it a Tesla event, then you're actually doing something pretty crappy to at that point threaten, and you're undermining the value, right? Because when people looked at the stock and said, oh, like, I'm excited, they don't just make cars, they have this whole personal robotics play, and they have this battery play, and they have all that stuff. When people invest and they get it, like that, when people don't understand the valuation of Tesla, I think part of what they don't understand is some people are investing for that like Tesla bot upside, or that like battery power grid, like what have you, upside, right? So if you sell people on that, and that gets like built into the price, and then you threaten to take it away, not only is that going to hurt your price, but it also makes you a little bit of a jerk. And like, it's kind of funny when it comes to Elon Musk, there's people on both sides, and we've said this before. There's basically people that like think we're Elon Musk lovers, and there's people that think that like we are like, you know, a lot of like, you're not even a billionaire, bro. Why are you talking about Elon Musk? It's just like, okay, you know, I have like I have been a professional equity analyst for 20 years. So that's why I'm talking about Elon Musk. I think, you know, there's some good opinions there for people that aren't professionals. But I think that, you know, the major thing there is that, you know, essentially what we're doing is just kind of talking about all sides of Elon Musk. And it's just like, to me, and I'll just say like the case really simply, to me, the issue with it is the whole chain of events where he basically wants to acquire Twitter. He sells a bunch of his stock to finance that transaction. And then he's now has like not enough stock for the AI thing. And it's just like, well, that's so annoying. And that's like some kid getting like $10 from their parents to buy candy, and like, you know, eating a bunch of candy and then being like, I want more candy now, or I'm going to throw a tantrum. Like, honestly, it is childish. Sorry. Like, it's just like, you are an adult, you spent your shares, like, you don't get to then like throw a public tantrum about like not having enough after you sold your shares. Like, as a CEO, like, you like, I have at times had to, like, just to bring it like a personal story, I've at times had to do like, I learned to code during the pandemic to help out more in terms of our R&D stuff. I went intro to Python all the way to deep learning, like, and you know, if I would have had to give away more of my equity, maybe find a new co-founder if I didn't do that, right? So it's just like, as a CEO, like, you always have these options, and you're faced with these things of being like, okay, you have your shares, you can like, you can, you know, use them to recruit, you could use them for yourself, you have like a lot of choices on what to do. But like, the one thing that you pretty much shouldn't do as like a mature adult is sell your shares and then complain that you don't have enough, and ransom the company you founded and the people that believed in you and pushed up the valuation of your stock for you to get those voting shares back. That is like, you can try, but to act all like wounded and play the victim about it, like, oh, I just want this and I just want to oversee. It's like, okay, if you wanted that, you shouldn't have sold your shares. Like, it's just really all that simple.
All right, we got some comments, and this person, well, first of all, Haley said cool shot. Thank you, Haley. But Musane is getting a little fed up with our live stream, George. He's saying he wants hard numbers, hard facts. Is Tesla in the Magnificent Seven or not, George?
Hard numbers and hard facts.
Because I know what he's referencing. I saw today on CNBC they were saying super six pack of stocks, and it was Tesla was removed. So I guess Musane wants to know, is Tesla would you still put it in that tier of good investments with those, you know, big tech companies? Is that what you're
I
at?
mean, yeah, I don't know. Like, I mean, I have a lot of stuff to say about it. Like the Magnificent Seven is the Magnificent Seven. They're that way, like, actually, because they've performed like way better than the market, like, over an extended period of time, like, especially Tesla. So like, no one can take that away from like being in the Magnificent Seven. Like, second of all, like, Tesla still is growing at the second highest rate after Nvidia of the Magnificent Seven. It's a lot going for it. Of course, it's still in the Magnificent Seven. It's a very, very exciting company that is like, they're great at innovation. And some people this is another thing that some people are just like Elon Musk steals ideas, and we've talked about that before. So like I'll go on the other side. So like he also really makes the ideas happen. Who cares? They bring innovations to market as well as anyone. Um, and like it says enough about like how well they do that kind of thing, like external R&D, like with SpaceX, like Elon Musk can do that. Like if you would have told like someone at NASA like 20 years ago that like there would be a private space enterprise that could execute on things that they didn't, they would have laughed you out of the building. Like even like 5 years, well, no, probably not 5, maybe 10. They would have laughed you out of the building. So there is that side to it, of course, is like he knows how to make innovations happen, and like even just like the grid and the power structure that like charging stations that he just like spearheaded, and now other people. I mean, he does like a lot of things great. So Tesla's a fantastic company, but like honestly, I would say my biggest problem with Tesla now is Musk's behavior. Like I probably will not make it a newsletter pick until like it could go in my model portfolio, which is obviously like my smaller portfolio. But I kind of have no interest in making it a newsletter pick until he stops with this like weird BS, like ransoming his own company stuff. Like, because to me, like it is uh it is table stakes as a CEO that like you say you're gonna build AI, like you say you're gonna build a Tesla bot, like that you build it for Tesla. Otherwise, like you've just completely violated my trust. My girlfriend probably is like tired of hearing me like be on a pedestal about this all the time, but I think like it's very important for anyone to honor their commitments, and I'm like, it's important for me to honor my commitments, and I say that, and it's like sometimes I think it's even like I'm probably more annoying about it than most people, because like a lot of little things I'm just like, no, this is important. Anyway, like I would say that like especially as a CEO and a leader, it's important for you to honor your commitments, because it's just like, okay, like what's next? Are you going to be like, oh, I'm making a new car, and like maybe Tesla can have the car idea if I'm in a good mood about it, and you're being that like, no, like you open that door of holding your own company hostage for compensation, and I would prefer to invest with pretty much any other company that has a leader at the top that isn't doing that, which by the way is every other company that I know of.
So we'll cover one final Tesla point from Hussein. And then Hussein, if you want to ask about other companies, we'll be happy to cover them. But he's just asking, is there a timetable of when the ship could be righted at Tesla? If he's a shareholder, would you suggest him holding on, buying more, selling? Like, how would you manage that position if you were a Tesla shareholder?
First of all, I'm gonna say Musain. I don't know if that's how you pronounce your name. Like this might be. I don't know how many of our streams you've been to, but what I would say is very, very important is like that kind of question. I kind of like categorically reject the value of. Like, when can we expect significant gains? The answer is nobody knows the answer to that question. You shouldn't be looking for it. You shouldn't really be asking for it. Nobody knows the answer to that question. And nobody knows the answer to that question with any stock. Because if people could do this kind of thing reliably, like hedge funds wouldn't lose and go out of business every year. Those are smart people with a lot of money, and hedge funds go under every year. This is not an easy thing to do. Nobody has those clear answers. That's thing one. Thing two is like I got to reiterate what I said. Like the behavior he's exhibiting is very risky, holding your own company ransom and even having like judges rarely need to step in and rule on a compensation package. You've got to be doing something pretty let's just say uh close to shady for a judge to like even have to be part of that process. So no, like, do I know when Elon Musk is going to stop holding his own company ransom? No. Like the day he stops, like, is it likely to go up? Yeah. But like, how do we know? A, how do we know like the day that he stops, or how to predict that? And B, like, how do we know he has? At this point, if Elon Musk is like, even if he was like, nope, I'm dropping the compensation thing. Like blah, 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 whatever. Like, how do I know next week he's not going to just like bring it up again?
Yeah. So hopefully he seems like you saying that's correct. So I think he agrees with you. Maybe that was a test, George. Maybe he was testing our live streaming knowledge. But we'll move on. We have a lot of AI stories and stuff happening in the AI space today, which is really cool. And there's like so much cutting edge stuff happening. So first of all, UMG is pulling all of Taylor Swift's music off of TikTok because they're fighting for not only higher pay, but they are concerned with AI generated Taylor Swift music, and they cover UMG is like the biggest like content copyright person in the space. Like they have Drake and Taylor Swift and all of these major artists. So I wanted to ask George, like, should I ask you this while you're live stream?
Well, I like the again. It's like we've had enough tech issues. I'm just plugging it in.
Yeah.
I'm here, everyone.
So someone's asking where the stream's at. It's in New York City. So answer that in the comments. Yeah. Um, yeah, the background is incredible. But I wanted to ask you, all around this AI copyright stuff going on that happened with, Hollywood, it seems like it was resolved. There was the writer's strike and actor strike that it seems like it resolved. But now, are we going to see another wave with the music industry? And does that hurt? Who does that hurt the most? The artists, the AI companies who are trying to make tech, the Spotify's, TikTok, social media companies? How does it all shake out in your mind?
Don't even get me started on music. Like we talk about Spotify all the time. But what I will say is that I'm a big classic rock fan. And I would actually call myself when I was younger a bit of a snob, like where I'd be like, oh, new music. And I like a lot of new music now, to be clear. So we'll get that out of the way. Um, but I would say the problem is we're already moving much more towards like AI already with all like the auto tuning and like production places. Like it used to be that artists most of them wrote their own songs, and a lot of them also produced um their own records. And increasingly, the songwriting is less and less, like the production is less and less. And like a lot of those studios, like for like auto tuning, like literally, like that's like AI, like making people sound better. So this stuff is becoming closer and closer to AI. Like the march towards AI and music has been happening already as like these production houses has been doing it more and more. So that's just like a very interesting question about like originality and artistry. And I'd actually say the problem isn't the AI. Like I would say that the problem is that there's not enough support for artistry in our world anymore. Where it was just like, back in the day, like Velvet Underground band, they were in Soho, like living on nothing, playing at like these local, these local places. And in that whole scene, like with like a lot of other people, but like it was an artist community and they all could have like side jobs and support that. Like that doesn't exist anymore. Like, so I think that's like a really big problem in the sense that it's just like, no, like a lot of the times, like to support yourself in this world now, there's like not, you can't really have a lot of space to be an artist. So I think that like that's the core problem. And then it kind of expands to like there is so much of that kind of like drudgery that like I don't blame people. You're like a 20, you've tried to make it in music, you've struggled, you're barely scraping by. You're like a 25-year-old that like gets put in a contract in front of you. Like, yeah, you sign away a lot of your like creative rights and the producers get power. And like maybe you barely even get to pick your own lyrics. You're just like, whatever. I'm like tired of like, I want a real studio and I want to live like a normal life. So that kind of thing is like, there's a lot of pressure that I think doesn't produce the best art. And that's kind of the other problem with this, where it's like when you have all of that pressure and it just becomes the standard to like not like even kind of defend your art, it does get more and more watered down and closer to AI. And there's like less and less true like artists like creating a lot of their own stuff. And I think that's actually like, one of the things that's like, I'd say a very weird problem that's happened with like Taylor Swift, where it's just like, my dad is really annoyed by Taylor Swift. And like honestly, like watching one, like I haven't had as much time to watch football. And like watching like just a few games, like I'm just like, oh God, this is annoying. Like it's like barely watching football anymore. Like you're all just talking about Taylor Swift. Like, but here's where I'm going with it. I don't blame Taylor Swift for that. Like, actually, Taylor Swift, for those that haven't watched, like, she's been like at it. Like, I can identify with this because I see, like, when I watch the documentary on her, I was working on finance at the same age that she was like working on her songwriting, like when we were teens, and she's been at it and she does write and produce and do like, so that is all to say that, like, that kind of thing is so rare that you do get people like that are obsessed with her, and maybe it gets too much obsession. But obviously she had it out with Spotify and she has power, and but the point that I'm making is that there's a weird thing where like people that are real artists are getting more and more rare. So like like there is an inordinate amount of attention like paid to them. But it's also kind of like the sad other side, I would say, where it's just like, yeah, I think part of the problem is like, and we've talked about this before, like the studios just like selling the artists down the river and charging too much CDs and like letting basically like that part of the industry die. Where like, for those that don't know, the only way you make money now because of Spotify and like the record companies basically ruining the distribution is if you tour. So yeah, I think that that's just like a major problem, and it's structural, and I think it's going to get worse and worse. Where like the more creativity that's just being like squeezed out of society because of this like pressure, and like your dollar's not going in farther, and more like wealth being concentrated at the top, giving those people so much more negotiating power, the more these problems get worse. Like there's less room for creativity, less creativity happens. That puts more and more power into the people that just want to like water down like pure creativity because it's safer from like a legal standpoint. And then we get closer and closer to hand it off to AI, because the truth is like the difference between like an artist that's basically like now having a combination of like a studio and a person maybe write the lyrics of the song, increasingly like AIs writing their songs, making arrangements, auto tuning. You're getting in closer and closer to, like, I would say, like, we're already in cyborg territory, so we're already going that way.
Speaking of cyborg, there's a lot of products I want to mention, but you saying, I love that you're commenting. He seems to agree with you, George, now after that little Tesla tiff and taff,
Yeah.
saying the laws are going to come regulate this very soon. But just to wrap up this little segment, so it sounds like you're really saying that the AI is going to harm the artists and maybe benefit the platforms. Would that be true?
Um, yeah, I definitely think that that's true. I think that, like, yeah, what we're basically seeing is like concentration, like as these platforms, and we saw as like these, especially like dying businesses, like music, like get more pressure on them, or even like the studios, like we talk about it with Netflix, and like that's why these strikes are happening. There just isn't enough to go around because they didn't run their businesses well enough.
Now, like Musain is saying, there's going to be laws passed around this, but if I could give an example, like UFC is pay-per-view, but there's illegal streams all the time because you really can't like implement the laws for this because there's so many people that could just do it. So even if there are laws for the AI music, it's still going to happen, right? Like there's no way they could police all of, like, because people could just generate it, constantly from different locations. So I don't know how much laws are actually going to do for this type of thing. Do you have an opinion on that?
Yeah, no, I agree. I think that like it's kind of like how we were talking about with the laws on Monday, where it's like, oh, good, you're gonna review the code of like Google's advanced AI code, U.S. government. Like, there's a reason you hire them for robotics and not your own people, because like you can't really comprehend what they're doing. Um, so I think that's like a similar problem with like any of these laws, where it's just like there are very few people in the world that actually really understand how these things work. And I'm not even one of them. Like I understand, yeah, yeah. Steven's the real expert here. Like I understand how AI works and like the functionalities of it. But in terms of like the actual code, like there's so much like basically the way that it works is a lot of like even like chat GPT, and what makes it run is like a small code base, but it's a lot of it is like calling other functions that call other, it's really standing on the shoulders of giants. And in terms of like understanding how each and every one of those parts work, there's not that many people in the world that really understand that well. And I wouldn't guess a lot of them are in the government. Like, and I'll give you the perfect example. Like the ex-CTO of the US, I was on a generative AI panel with him a few months ago. Which by the way, he's a lovely guy. Like, I think he's great. Like, we were going back and forth a little bit, and like my comments on some of the stuff that I thought in terms of like US innovation and their policy, we disagreed, but did it respectfully. But like one of like the perfect examples of like basically the point that I'm trying to make, and this is no knock on him. He's a Princeton grad, public policy, very sharp guy, but he was the CTO of the US as a public policy major, like, and doesn't have any real technical experience in terms of like coding large systems. Um, and so like, yeah, I think that's a perfect example of like, what my worry is, which is that like, yeah, the government isn't really known for being able to attract like elite, like especially programmers. So like if you can't do that, it's very hard to even understand like what laws will actually like work versus like be kind of like shows of force or like whatever they are, which a lot of the time don't really work. I will say this from talking to Mike Kratsios, who's very nice guy. I don't mean to like come for him and his like, it was just more like, I wish people had more technical qualifications in the government. Like, and I think he would probably agree that like ideally, I don't want to put words in the mouth, but like ideally you want a CTO to have like a long history of programming in a perfect world and business experience. Public policy, certainly not a bad thing, but ideally you'd love both. To like think about some of these policies. But the point that I'm making is that the one thing that I did really learn for them is it's pretty clear that the US government's general policy on innovation is they don't want to stifle it. So I think the chances of actually like having any of these laws do anything that stifles innovation, aka gets in the way of AI development, seems like a low probability event, no matter how much posturing we see.
So you mentioned cyborgs before, and I have two AI products I wanted to mention today because they're so cool. One of them is a Musk company, it's Neuralink, but we'll get to that one second. So there's a startup called Prophetic, which is releasing a band that people can wear around their head. It's called the Halo, is the name of their product, and they have allowed people to do like early signups to try it out. I believe they got like 3,000 signups in the first day that they released it, and it was a $2,000 product with $100 down payment. So these people are probably actually going to want to get it. So that's a good sign for them on their opening day. But it's a band that goes around your head that allows you to lucid dream in your sleep, like every time you wear it, which is just crazy. And we'll talk about that. But then there's a Neuralink product called Telepathy, which is the chip implant that I'm sure if you've been like curious on AI, you've probably seen these Neuralink clips before. And the first one just got implanted into a person. And I just have so many questions for you and concerns. Like, someone gets that in their head and then they get ChatGPT in their head. They're not like a human anymore. They have access to all knowledge in like the blink of an eye. So I don't know. Maybe you want to talk about how that's going to affect investing going forward with people that just have instant access to like the internet, like everything that's been.
Can you repeat the first piece of tech? Because I ended up thinking about the second answer, and I want to hear the first piece of tech.
So it's a company called Prophetic, and the product is called Halo, which is like a band you put on your head.
It's a dream thing.
Yeah, yeah.
Like, yeah, okay. That's like, there's no real like scientific evidence of lucid dreams actually being a thing. Like, there's some people believe it or it's not. Just that's just the first thing. Like, because like honestly, it's just a little like the idea. And I need to get into lucid dreams, but I just like. I feel similar to that as like a lot of like the startups that can like beat the market. It's just like, yeah, that's a nice like story. Like,
I will do want to mention this. They said like when they released their product, like people don't always remember the lucid dream, but they claimed you have one every time you. So it's like,
oh, that yeah. That's hilarious. It's like having in a funeral home, just being like everyone, like, everybody that we've put in a grave 100% review, 5 out of 5 stars. You know, it's like never had one complaint. Like, like everybody, they just, they're on board. We're waiting to get our first complaint. Never had one. That's hilarious. Um, anyway, the big thing there is, I think, in terms of like I'll tell you, like, one of the things, people that have like heard my personal story, like one of the things that, like, other than seeing some like dark stuff in the equity markets, like one of the things that really got me interested uh in one of the things that really got me interested in tech was actually some of the, like, the buds of the starts of these things. I actually saw someone in London with someone in New York move like a little like mechanical arm across the continent, like across the pond, as they'd say, with their mind. And that's when I was like, oh, like, okay, AI, like that's actually one of the things that like pushed me over the edge to start an AI company. Like, oh, this stuff actually might be closer than we think. Um, I'm like, just so people know, like, directly what I was doing there is like understanding the content of a thought is a very difficult problem, and like very difficult nonlinear equations to solve it. And like a lot of people use fMRIs. We're starting to understand more about like locations of thoughts and everything. But like, in order to do that, you have to have a really pretty good understanding of like, I would say both neurochemistry, as well as, basically a program that can transfer that neurochemistry and figure out the exact content of that message, which, like, by the way, is just an electrical current in our head, of like neurons firing in certain ways and like lighting up. So yeah, we figured out a lot. Like, obviously we can't yet like the holy grail and what people like get to in terms of like, more of like a mind meld, or like being able, like, for those that watch Black Mirror, being able to like put your consciousness into something else. Like, we need to know a lot more than just like how to, you know, send a message like that and have something work or have that connection. Like, a lot of people are like having like fake limbs like put in that they can actually move, because we understand like even how to send those like basic messages, and we've like mapped that and done, initial machine learning on it. But yeah, I would say that like all of that stuff, like, I think the most interesting and best thing to say about that kind of thing is like we're kind of cyborgs now. And like the only thing that like sometimes I try to like I got a laptop in 5th grade as part of like a laptop program, and my year was the first year that did it. So when I was the first 5th grader, I was the first class of 5th graders at my like, little New York private school. And I went to public high school, by the way, for anyone that hates on private school. I'm probably one of those people. And and so I was like, I kind of was at the cusp, at like the beginning of this technology age. And I kind of like try to think about like what was it like before the internet? Like the only thing I could identify is like, yeah, like people argued about things a lot more, like in terms of like things that you could Google, like who was in that movie or like whatever. Like there was no clear answer before Google, and you just sometimes could argue about it for hours and hours. Um, but like the thing that I would say about that is that um we're already cyborgs. Like, as quickly as I like go, like, and just like, it's not just like agreements. I can barely like, yeah, like people make fun of me, but like it actually like I can't even go to a restaurant without like checking the reviews first, because I'm just like such a data junkie. I'm just like, why would we take the risk of going here when we can find out what people say about it first? And like I do kind of like miss that part about myself, that could walk into a restaurant and just be like, hey, but like that's kind of like the same person that's like, maybe I'm longing for something that's dumb, because like I don't really long for those like endless debates about stupid facts that you can look up. Like, I don't long for that at all, is the truth. Um, but yeah, it's the same kind of thing with restaurants. Like, yeah, like I like having a more carefree attitude about things, but maybe that was just me as a kid. Like, what I don't do as much is have meals that I don't enjoy. Like, which used to happen all the time when I would just like walk into a place and like you wouldn't know how it was. And you're just like, oh, this isn't even very good food. Like, it's kind of like, I think that's what causes me to be like, why wouldn't I just check? Um, so yeah, I think like depending on who you are, you're, some degree of being a cyborg now. And so yeah, essentially, like I think that's gonna happen. We're gonna get more and more of that integration. Um, and I would say the real interesting thing to me is medical technology. because I think we're in a weird place in history where we can like keep people alive, but like not really in a state like some people it's like really sad and you see like people with their grandparents or parents that still have parents or whatever. It's hard because like I think a lot of those people are like holding on, and like if you ask the people like that were actually like 104 and have all these ailments, it's like they probably like don't really want to be around themselves if you gave them a choice. But that's obviously a very prickly subject. Anyway, what I'm saying um is like I think that that's the most interesting part. Like even like these M
mRNA.
mRNA vaccines that are just like basically like smart vaccines, like where viruses are programmed to, obviously evade capture or, whatever. Like some of these things are like actually programmed smarter to target them. Or so, I mean, I think that's like a very interesting part that we're starting to get into, where we're seeing more and more of that stuff. Um, and I think that's the most interesting question from like all this Neuralink stuff. Like, yeah, like we can Google things in our head. And like, honestly, I think that's pretty annoying because like I actually think a big part of the Prospero business model is like why we give everything away for free or like, and we have this free app is like eventually we want to partner, earn trust. And eventually we want to ask people questions like, what's your temperature? And be able to model a pandemic in real time. And essentially do what the US senators did when they were shorting the market and reassuring the public. But and just eliminating that information arbitrage, where instead of like those senators being the only ones that profit, we make that a public good. Everyone gets the benefit of that, and then everybody has an incentive to share more data. And like we want to earn people's trust because it's like, look, how do you know that we're going to use your data to give you stuff for free? It's because like we're doing it before you're giving us your data, so that's as good of a way to earn trust, I think, as any way. Like one day when we do, make sure that we've earned enough trust to be like, hey, like can we share information like that? Or like what easier, like what is phone are you buying next, so we can predict, so we can give you really good Apple predictions, let's say. All of that is like super important to us. And the reason that that's important to us and why we did it is like we think the value of technology as it becomes more and more ubiquitous is going down. Like, what's the other side to this? Why am I coming full circle? Because like if everybody's walking around with Chat GPT, Google in their head, like whatever, like what makes you interesting? What makes you smart? What can you do with that information? Or do you have any information that other people don't? Hence our business model, right? Because that's technology becoming more and more ubiquitous, and AI becoming more and more advanced, and everybody's access. So what becomes more important? Unique data, a partnership with users is super important because all these companies depend on taking data from you without your consent, barely with your consent. Sometimes long terms of service, like what Prospero has done in the past, and we'll do again, is like none of us will be like dark pools. We'll just be like, hey, please answer this question. What's your temperature? What phone are you buying next? Like things like that, where it's like explicit consent, and we're all creating, a good relationship together, where what you're like both like what we want to do with it, which is share the benefit, and then exactly what you're giving over, and that's very different than the value prop because like the truth is, Microsoft, Google already takes so much information from you already. So like that we don't really consent to, and we just kind of like accept, and we're just like, oh, what can we do? Like, even if I'm a little uncomfortable. But the point is like, that is the problem. If Goldman Sachs asked you like what your temperature was, or Google asked you what your temperature was, a lot of you would be like, okay, like fuck off. like why? Like what are you doing for me, Google? Like serving me ads? Like sure, whatever. Like that's none of your business. You probably know anyway because you're listening to me, but I'm not gonna give you the benefit of like letting you think that I'm okay with this. And that's my general feeling on it. Because I don't think we have privacy anymore, but I do think we have some agency to just be like, hey, I don't like what you're doing. So I do that whenever I get the opportunity.
Yeah, so it's interesting that you brought up the medical aspects of it. I do want to mention that the first Neuralink people are people that are paralyzed, so they're trying to do some good there. But we have one more topic of the day. It is Walmart. They announced their first stock split since 1999. It is a 3-for-1 stock. All of their workers everybody at their company an opportunity to get paid in stock or buy the stock. Um, so would you buy a stock based off like a stock split story, George? How much does that actually help if people don't understand like the dynamic of like what a stock split means? Maybe you could just explain it quickly.
So, first off, I want to say that it's really funny. Um, my girlfriend pointed this out to me the other day as we were like actually moving into this place, how much Amazon has now like ripped off the colors of Walmart. I was like, oh yeah, that's true. They're just like straight up stealing their color, which is like hilarious. Talk about like adding insult to injury. Like Amazon's already like just stolen a lot of Walmart's business. Like just be like, oh, we're gonna steal your color too. What are you gonna do about it? Because like that's the thing. Amazon is baiting Walmart. They would love to have that like you're using our color like lawsuit. That just makes Walmart look like bitter, like a bitter loser. So like I wouldn't be surprised if like, oh yeah, I hope they sue us over this. We're gonna use this exact blue. Um, but yeah, I would say just a story like I was looking at ordering something on Walmart and I said like it was like marked at like 74 and then marked down to like 47 and then I looked at it on Amazon and like that was going to take 3 days and I was like wait actually after I ordered it I was like let me just take a look at Amazon and I like saw that big markdown I was like oh this must be a better price and it was still $10 cheaper on Amazon and I was like why am I even on Walmart? Like sometimes, like I'm sure some people remember the story when I said that I actually had to buy 28 days later, like a DVD copy because you can't stream it anywhere. Like that's a sign of how broken streaming is. But yeah, anyway, like the funny thing about that to come around about is like splits matter, and so like a 3-for-1 split, most stocks split like most stocks that aren't like dying split like 3-for-1. So basically, like if you have 30, like if Walmart is trading, if you have one share of Walmart and it's trading at $30, after a 3-for-1 split, you will have 3 shares of Walmart and it will be trading at $10, right? So you own the same $30 in Walmart stock, you just own a different amount of shares. That's the 3-for-1 split. Like the one thing to be very clear about a split is like it never changes the value of your position. Now, the mechanics of a split are very important. Like I talk about AMC all the time. They did a 1-for-10 split, which is like a big sign that uh that your stock is like going into the crapper. Like I think it was like what because like basically like that only happens when like you're getting so like you're basically we're getting close to a penny stock. You're worried about being delisted. You're worried about people looking at your stock and saying like, oh, this is getting pretty close to bankruptcy because it's getting too close, like below $1, like whatever. So that's the reverse. Like let's for those numbers, like if you had, AMC trading at $1, I think it was close to that like a 1-for-10 split is like if you own one share, or sorry, if you own 10 shares of AMC at $1 and you own $10 worth of it, a 1-for-10 would be instead of that one that those 10 shares at $1, 1-for-10 would be you now own 10 shares and it's trading at you now have one share and it's trading at $10, right? So you still own $10 of stock either way, except in the 1-for-10 split, you own 10 shares at $1. And if it goes in the other direction, you then own that same $10, but it's one share at $10, right? So this is all to say, like, yeah, a 1-for-X split where the second number is the bigger number, that's generally a very bad sign for the stock. And generally it's going to perform poorly after that kind of split. The other side is like, where the first number, like 3-for-1 Walmart, like generally you do like either before or the time you do get a bit of a bump there. And the biggest reason is like generally the cheaper stock is like the easier it is for people to own. And like for whatever reasons, it doesn't make any sense, but it still is very true of retail investors. Like if a stock is like, trading at $5 and they can like get like 100 shares of it instead of like trading at like, let's use an extreme example, $50, and you can only get 10 shares of it. That makes a difference to people, but honestly, it doesn't actually make a difference. You still own the same amount of stock. The percentage changes are going to matter more. It's like, it doesn't really make that much of a difference. Only like people like to feel like they own more stock. And if it's lower, they feel like they're owning more. Um, it's psychological. So like the rest of that part is that like, yes, but what's very important there is like it's got to be a hot stock, right? If Tesla, like Tesla's actually a bad example. If Nvidia like did like a 10-for-1 split now, right? I think the stock would definitely, like, the day of it would go up, after the split it would go up. Like that's an example of a stock that has a lot of buzz, a good future, that I would bet if they announce the split, it would be good. Um and like Apple's pretty famous for doing those really good splits that always went well. Like a lot of the times they just be like 2-for-1, they'd market around it well, like Apple does really well. So yes, generally if the first number like 2-for-1 is there, generally more bullish. Opposite like 1-for-2 or 1-for-10, like we said with the generally more bearish, but that's general.
Yeah, I think that's the most important thing to take away. It doesn't change any fundamentals with the stock. And usually when George was referring to like the bad type of stock split, it'll be called a reverse stock split. So you'll know if you see that it's the bad type. But that's the ending of our topics for this stream today in person. It was I think it was a good one. Everybody comment if you enjoyed the new view. We'll probably be back here filming and Prospero to the moon.
Yeah, yeah. Well, this is our new location. Steven won't be necessarily next to me all the time, as much as I would love that. But yeah, I think that should be everything, everyone.
Yeah, thanks for coming. I hope you guys found value in this. We'll be back Monday, 11 a.m. And happy investing, everyone. And see you again soon. Bye.